Now, we've seen increased market volatility, and that's good for companies like IG Index. We're talking now to market strategist David Jones from IG. Welcome. There has been this increase in volatility, and some of it I know has come through since the increase in margins on the commodity markets. How has it affected your business? And talk a little bit about the volatility and what it means.
Volatility is always good for a company like us, and I'm sure it's something that other brokers would say, because ultimately what our clients want is markets to be moving around. The way companies like IG make money is on a volume model, so the more trades, the better it is for our bottom line. So when markets are volatile, like we've seen during May, as you say, started off by that mini crash we had in commodities at the beginning of May, it's good for us and hopefully good for the clients because the markets are moving around, giving them an opportunity to profit.
Is it good for the markets as well, that decision by the CME and those others who have raised margins on commodities, because it's squeezing out speculators? And we quite often hear in the press that is actually good news. Is it good news?
I would say, as someone in the markets, I don't think it is good news. The rate they increased those margins. We saw margins on silver go up something like 84% in 2 weeks. I think it was
massive drop in silver as a consequence.
Oh, a massive drop in silver, as of course. And I think the reason was because there was so much hot money in silver, and it was speculative money because we saw it run away so sharply over recent months. People thinking, well, actually, I can't really afford to stump up the extra money in margin. I'm going to close out my position. And we had a situation, of course, where everyone was heading for the exits at the same time. We saw silver drop from near $50 down to 33 in very short order. And that is a massive move for a major commodity like this.
As a consequence, the dollar's gone up.
Exactly, and this leads us, I think, to what we want to talk about today, is the volatility that we've seen started off by that in Forex markets. And again, I think over the last couple of weeks with the whole crisis of the Eurozone raising its head again. And Forex, I think, amongst our clients, the sort of the bread and butter of what our clients trade tend to be individual equities and indices. They're always the most popular markets, but Forex is always hot on the heels of those markets. There's always a lot of interest amongst clients and private investors in the FX markets.
Well, one of the charts you brought along is the euro dollar. You've got a trend line going up. That's the euro appreciating against the dollar. But we have quite clearly seen on the right hand side of the chart that drop there for the euro. How much further has this got to, has it reached a sort of mini bottom at the moment, or do you think it's got further to fall?
I think at the moment, over the last couple of days, we have seen some strength coming in for the euro. And as you say, it's been quite a torrid month if you're long the euro. At the beginning of the month, we came in around about 149 on euro dollar, which was the best levels since December 2009. So we have seen a very strong rally for the euro off this year's January lows. We dropped back about 900 points in May, which again is a fairly chunky move in a currency pair. But I think at the moment, this longer term trend for the euro against the dollar, of course, a main driver here has been dollar weakness, but there are other reasons why the euro is still so strong. I think that what we're seeing at the moment is just a slight retracement against that trend, and it would not surprise me if over the course of the next few weeks, couple of months, we saw the euro nudge back up to those 149 levels.
What about the fundamentals? Eurozone, we're seeing higher interest rates, nothing in the States. You've got what can only be described as turmoil around the Eurozone, with all sorts of concerns about those countries allegedly in problems, and of course Italy most recently, but Greece, Portugal, Spain.
I think that is going to hang over euro sentiment in the short to medium term. And I think if we wound back to maybe how the market was in November, when we had, of course, the Irish bailout, there were many people then, when all that was going on, calling for the death of the euro. But again, I don't think it's going to be the end of it. Yes, it's going to be volatility. Yes, it's going to be maybe a while until we see the euro scale back up to those heady heights around 149, 150. But I think once, hopefully, the situation regarding Greece moves forward, I think it will take away a lot of the bearish sentiment once again for the euro, and we'll see it rally.
Pound against the dollar. We've seen a similar sort of move against the dollar. Again, recently, a similar move as money's gone back into the dollar. What are your thoughts on the pound? On your chart, you've got a support line. What's that telling us? Where are we going from here?
I think there's a major support from the last 12 months or so, down around about 153 for pound against the US dollar. And the weakness, again, as you say, that we've seen this month as a consequence of a flight back to US dollars for safety, has knocked the market back to a shorter term level of support. So at the end of last year, we were seeing, whenever we saw dips on the pound back to 159, 160, we'd see the buyers come back in, and we're back down there again now. So again, I think for the pound, it's been knocked back this month from its best levels since the end of 2009. It wouldn't surprise me to see the pound claw its way back up to those again over the next few months. But I have to say, I think if you look at maybe the fundamentals and the price action in the market, it's arguably a less bullish argument for the pound against the US dollar. I think we'll see plenty of volatility week in, week out, but because of maybe the inflation problems that we have over here in the UK and the unemployment problems that they have still in the US, it may not be too surprising if pound against the dollar ends the year roughly where we are now, around about 163.
What's the trade at the moment? What are you seeing as the trade that people are liking?
I think on the euro in particularly, I think we've seen people positioning themselves for a rally in the euro and a little bit in euro sterling. Maybe again some speculative buying of the euro against the pound, thinking well they've both been beaten up this month. The euro's maybe got the chance of the stronger bounce back. So we have seen clients in the very short term favouring the euro. I have to say I don't think there's any hurry to get in on the euro dollar trade. I think we'll see. We've been up the last couple of days. If something again happens to do with Greece or maybe concerns increase about Italy, it wouldn't be surprising to see it knock back 200 points or so.
Sure.
But I think at these levels it's definitely worth watching and thinking about taking maybe a longer term position for a move back up of maybe 6-7% from where we are now.
Okay, all right, David, thanks. David Jones there from IG Index.
This film is for educational and leisure purposes only. Proactive Investors does not provide investment advice. The company is a publisher and is not registered with or authorized by the Financial Services Authority. Please refer to the full terms and conditions on the Proactive Investors website.